Well, if you own stocks or Bitcoin, you had a fantastic day. But if you're waiting on the sidelines for mortgage rates to get a little bit better, you didn't have such a good day. So we're going to talk about in today's video is why did mortgage rates go up? Because we had really no financial data. But did we? I think we saw some financial data, or at least some inflationary numbers come that a lot of people missed. So what we're going to talk about today is the inflation numbers that might have just snuck past the markets, and the markets didn't even see it coming. So here's what we're looking at. Overall, the equity markets aren't looking too bad today. We have AMD, or one of the chip companies down through here, just making a rally for it today. AMD stocks rallied 23%. So if you have that, or Bitcoin, having a pretty darn good day. But if you go over to here, we're trying to figure out, with really no data coming down the pike, how do we figure out what's going on with these things? Because this is the stuff that the Federal Reserve's most interested in. They're most interested in is the jobs report. But I do think we got some financial data today that's giving us some inflation numbers that the market's just completely missed. What it is, right through here, we got some inflation numbers on, well, at least rent numbers today. And what this is providing us is a big piece of what the inflation numbers come out to be, because rent, or the equivalent of rent in housing, comprises 40% of the inflation number. So why is this so important? Well, let's look at the data, how it's coming in right through here. If you break this down, it says apartment listing asking rents grew a negative 0.8%. Why that's good? Well, that's going to start drawing down the inflation numbers. And just want to give you what the impact would be, or at least look at, when it comes to treasuries and mortgage rates. Because if you're watching this video, you're trying to figure out what's going on with those and the whys behind it, and that's my job. Okay, I'm actually a federally licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. Love to put my 30 years of experience to work for you. So if you're out there looking to buy or refinance, I'd love to help. I have a slogan: one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? I'll give you all the information about that at the end of this video. Today, what I want to do is explain to you guys how the rent numbers might actually be panning out for those homeowners waiting, and maybe those that put off putting on for refinancing their home. So let's kind of dive into today's numbers and what they look like. So here's what I want to kind of expose or propose to you guys is the inflation numbers, any pieces of these components come in, we're going to dissect it, because that's all the data we have right now. We don't have government numbers. So we had some numbers in regards to rents. So I ran an analysis on this, and here's how the data comes out. And it's not looking bad for potential home buyers and those also homeowners looking to refinance. Let's dive into the data. So here's what we're looking at right now. This is the baseline for Q4 of 2025. CPI is going to come in at about 2.8 to 3. The PCE is going to come out at 2.6 to 2.8. Now, what are these? Well, these are the two inflation numbers that the Federal Reserve monitors. Okay, so what does it affect? It affects things down through here, the 10-year Treasury. And that's what a lot of people focus in on when they're trying to figure out what's going on with mortgage rates. But we here at the channel, we know that we need to focus in on the MBS market. So that we do such right through here. And then what that's going to do to the 30-year fixed, basically the loan, the percentage that gets posted out there every day. So here's what's basically proposed right through here. And this is actually the numbers I'm proposing as well. I'm saying mortgage rates should be about 6.25 to 6.5 through Q4 of this year. And I'm kind of right in the baseline of where these numbers are. But based on today's inflation numbers on the rents, here's what potentially could happen. That could draw down the inflation numbers on the CPI by 0.2. That's a pretty dramatic move. Okay, the PCE, what could it do to that? Same thing, 0.2. So that could bring it further down in the wheelhouse of where the Federal Reserve wants things. The good news is on the 10-year Treasury, this could bring it down about 0.25%. Once we get down to 4, and we can close at 4% and stay there for a day or two, you're going to see people piling in on that trade. That's going to help the overall 10-year Treasury. And again, it's going to push the prices up because it's going to get more competitive. What do we know here on the channel? Well, the prices go up, rates go down. And I'm going to show you the MBS chart today, and it's not looking good. But what this would do, though, is on the MBSs right through here, it could push the MBSs up 3 ticks, maybe 12 ticks. That's good for mortgage rates. That should push rates right down to this level, between 6 and maybe 6.25. Okay, not bad. But what if the tariffs come in and it's like, oh boy, we're not getting that much relief because tariffs are kicking in a little bit higher inflation. Well, what would happen in that situation? Because we're not looking at a peachy story the whole time through here. So if you go over to here, what would this do to the CPI number? Even with the softness here, well, the CPI would jump up to 3 to 3.3. That's going to shock the Fed and the markets. The PC is going to jump to 3, and if it hits over 3, that's going to shock the markets. What would that do to the 10-year Treasury? Well, Rick Santelli said once the Federal Reserve would cut, this number right through here, 4.2, that's the 10-year Treasury. It was at 3.99 when the Federal Reserve cut. He said this would jump to 4.2, and it hasn't. This is where we are right now. But in this case, if the tariffs are a little bit more inflationary, it's going to push up rates even higher. What that's going to do to the MBS market, it's going to crater it. What happens when the price of a bond goes down? Well, we noticed when it goes up here, we get better rates. When it goes down, rates go up. So what would the outlook look like in that scenario? Well, rates would be at 6.4 to 7%. It could move faster than you expect. Well, now let's go and take a little bit of an outlook on 2026. And we'll be doing a broader view of this on a live event here soon. But in 2026, here's what the outcomes look like. And we have, again, two completely different scenarios. CPI baseline is right through here, and we're expecting rates to be, basically where I've been calling them, between 6 and 6.25. That's what I'm expecting in Q1 to Q2 of 2026. As long as the data keeps coming in as expected, we might hit that 5.99 tier. If rents continue to soften, the CPI and the PPI continue to drop, that we're seeing here closer and closer to that 2% where the Federal Reserve wants it, well, then that's going to bring down the 10-year Treasury. Once it gets below 4, we know there's going to be a rally there. What's that going to do to MBSs? It's going to rally it up. What happens when it goes up? Well, rates come down. Okay, but if tariffs again shock the system, well, I think inflation is still going to come down, and we're still going to be in the range of where we are in rates now. So for home buyers, I think you're in a pretty good environment of stability here. For homeowners looking to refinance, well, that's your challenge. So let's get over to today's market, but I do have a tool for you guys out there that are homeowners. If you go over to our website, we have a tool right through here. It's called Ratewatch. This is actually called Ratewatch 2.0. This is our new Ratewatch tool, and this thing's on steroids. What it's going to do is it allows you to tell me what rate you're at now and what rate you want to refinance. So let's say you're at 7.25 now, and you're like, Dan, when it hits 6.25, I want to refinance. Well, let me know in this application. Let's say you don't know, and you're like, Dan, I don't know. Well, do me a favor, grab your mortgage statement, just put it out there and go into this tab, click it, and we're just going to walk through it and put in your data. And then just do me a favor, just put in a rate down here that you're looking for, maybe 1.5% lower than it is that you have now. Then when the numbers hit those, I'll reach out to you. We'll go over what the new payment would be, what your monthly savings would be, what the cost would be, and what your break-even point would be. If it works, fantastic. If it doesn't work, we'll just lower the rate on that thing. So that's what I want to do to those homeowners out there. Okay, so let's get over to the MBS market. This is what we follow on a daily channel. So if you're new to my channel, here's the bond market we follow right through here. This is the mortgage bond right up there. Okay, so again, like I was saying, how you look at this thing, because it's going down. So you're like, okay, that's good for rates, right? No, this is the price of a bond. So what you have to understand up through there, if the price of the bond goes down, any bond, okay, the yield goes up. So we don't like when the price goes down. We want to rally in the market. We want people buying these bonds. So when the price goes up, rates come down. And that's what really pushed rates down years ago. The Federal Reserve came in and they were buying $40 billion of these a month. That's what got rates all the way down to like 2.5%. So for the economic calendar this week, we really don't have much to talk about because we have no government data. The scary thing is each day, though, we're going to have a Fed official coming in telling us, their thoughts. And that can and probably most likely will move the markets because we don't have any really true data from the government. You go over to the Fed Watch tool, in 22 days, the Fed's going to do what? They're cutting rates. They have no option other than cutting rates. But we want to see what they come out and actually tell us, and basically what the data points. Once the government does open, what are those data points going to bring us up to? Is inflation hotter, lighter? How's the jobs market? Then if you go to earnings reports, this is why I haven't done this in a while. There's really not a lot of earnings out right now. So after the bell today, we had two companies report. Let's see how they did. On the revenue side, one reported, one didn't yet. Or on the earnings per share side, one reported and one didn't yet. So that doesn't look so bad. So overall, folks, the market's just waiting for some data to come out. I think it missed some of the data right through here. So it's looking like some of the inflation data, at least on the rental side of the equation, the housing data is coming down. So that's going to be good news for inflation, and it should be good news for the Federal Reserve as well. They can finally say, whew, maybe the inflation is not going to be as bad as we thought, and they can start cutting rates even further. And that's going to give some comfort to the overall bond markets and the rest of the markets. And so overall, you're probably going to see these markets continue to rally, even though I think they're a little frothy. I'm not selling anything now in my positions. So that's our report for today, folks. So hopefully I answered that question for you. What's going on with those and the whys behind it? Then going over to who I am and what I do for a living. Folks, my name is Dan Frio. I'm actually a federally licensed mortgage loan officer and licensed in all 50 states as well as Puerto Rico. I work at a bank that's pretty unique. I joined this bank to help them grow. And what we did is we set up ourselves with over 30 other lenders. So when you call in, what we're going to do is make sure we get you approved. But then we have programs and interest rates and all these that we can use from over 30 other lenders. Find out how to do that. We'll just go to therateupdate.com. Here's all the tools that you have for us. You can give us a call right above my head. If you're looking to buy a home, check out this down payment assistance program. It's up to $7,000 you don't have to pay back. So even when you go to refinance, a lot of people are finding out now that have a down payment assistance programs. When they go to refinance at this point, it's pretty tough. If that was a loan, this isn't a loan. It's basically free money to you. Don't have to pay it back, and there's no lien attached. So check out that and all the other programs we have to offer. Thanks for watching, folks. Greatly appreciate it. Visit me back tomorrow so I can show you what's going on with those and the whys behind it. If you haven't subscribed yet, folks, I'm trying to get to 40,000 by the end of the month. We're about 900 people away. So if you haven't subscribed, please do so to help me out down through there. So thanks for watching. God bless, and I'll see you tomorrow at the opening bell. Take care.